This short-term rebound in gold is very likely drawing to a close. Why? First, looking at the charts, the peaks of gold's rebounds have been consistently lowering. It dropped from the previous high of 4,500 down to 4,400, and during last night's US session, it pulled back before even touching 4,400. After that, the savage dumping we saw earlier, a high volume crash on the daily chart that left massive trap positions. Yet the bull's conviction remains fiercely stubborn. If I were the market maker, my only move would be trading times for space, forcing a grinding downward consolidation to break everyone's sight, just like last time, waiting for the majority to capitulate and cut losses before initiating the next major rally northward. Tomorrow, as Watch speaks, the market makers will likely make their move. The market has already pricing no rate cuts. The real focus is whether Watch turned hawkish and whether the dot plot, the ultimate tool for pricing interest rate expectations, will be eliminated. The latter could easily trigger massive volatility. Now look at the liquidity side. Gold ETF saw a massive net outflow of 2.3 billion last week, and marking the fourth consecutive week of capital flight. Without a doubt, it flows straight into US tech stocks. Gold is being actively bled dry by AI, and therefore, until US equities undergo a deep correction, it will be incredibly difficult for gold to secure any real liquidity backing. Turning to the news front, everyone assumed this rebound was triggered by the peace talks between Trump and Iran. Far from it. If you strip away the packaging and dissect the actual terms of this agreement, you will see it's nothing but a paper-thin facade. A $300 billion reparation payout of the pockets of Middle Eastern royals, even Li Hongzhang wouldn't have signed off on something that absurd. Knowing Trump's playbook, those who get it, is the market really that blind? The sole reason for the rebound is that gold fell too hard and too fast in the short term, triggering a desperate technical need for relief. The news dropped at just the right moment, and the market simply held its nose and butt into it. Now, the anticipation surrounding the official signing on the 90th is about to materialize. When the good news pricing, bad news follows, making another dump practically inevitable. So where is gold's true bottom? I believe there's a high probability it lies somewhere in the 3,000 range. One of the key triggers remains today's interest rate hike by Japan, which is forcing USD JPY carry trade capital to unwind and flee from speculative positions in gold. Some argue that after the news hit today, gold didn't drop, but actually ticked slightly higher. In reality, the transmission of this kind of macro bearishness into gold price action take time, at least 1 or 2 weeks. At the same time, once US stocks inevitably begin their correction, gold will initially be sort of simply because of the superior liquidity. However, there is no need to be pessimistic. I have consistently told you that I remain highly bullish on both gold and silver over the long haul. We now have a compelling new catalyst. The massive global capital expenditure flowing into AI infrastructure development is highly likely to become the potent new driver of inflation. Gold and silver, by their very nature, are the ultimate inflation hedges. And thus, in the short term, patience is required as to weather this choppy bottoming process. When will the real reversal arrive? Keep a close eye on silver's price action. While gold has breached multiple key moving average, silver overall structure has shown far greater resilience, holding firmly above its 50-week moving average. Therefore, once the market finally reverses, silver will act as the starting gun and sounding the rally horn. Trading strategy: continuing to short-term rallies near 4,352. If the price spike above 4,352 tonight and push into the 4,380 to 4,400 zone, it remains a valid shorting setup with a primary take profit target at 4,200. And for silver, the optimal short entry is around 71, a prominent previous support resistance flip zone, and targeting the first take profit level near $67. Okay, as always, this is just my personal analysis, not financial advice. And also, shout out to EBC Financial Group for sponsoring the content. Bye bye.